Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend, all. Ira Epstein of Lynn & Associates with your weekend version of your agriculture update for this Friday, the 15th of December, 2017, and we're now past 1:30 in the afternoon. You can see that for the day, because these are daily bars that I put back up here, our quote board, if you will, down another penny in the corn, not holding rallies well. Beans had a miserable week. They have fallen out of bed. You're still in trouble in the soft markets. A number of markets coming out of Brazil are in trouble because they are trying to do what we'll call pension reform there. The country simply can't afford to pay the pensioners, and they want to raise the age before you can get your pension. The public are vastly against it. The president's got his hands full. They were trying to get this done before the first of the year. Now it's going to be a February vote, but the Brazilian real took a hit all week on it. Today you got a little reprieve in it, but the markets realize this problem hasn't gone away. In fact, they couldn't even get the vote taken because they knew they'd lose. Bad news for the agriculture products coming out of Brazil. So let's go right to the beans. And as you can see, you've gone on a monthly chart from 1208 down to 2017. Now this 1208 was made in 2016. You fell from there $3, and we have now spent a long time, I can't emphasize that, long time, just traveling here between $10 and roughly $9.50. Each bar represents a month. Now let's go to the weekly chart. On the weekly chart, this is the first time that we've seen the market close back under the 18-week moving average of closes since back here, since September. So the market after harvest is starting to feel the weight of this market. It certainly doesn't help the market to see Brazil, Argentina, all the crop sizes they have, and then see prices falling there because they can compete with what beans we have in our bin, and it's weighing on that market to a certain degree. You see this on the weekly chart is if I take this out of here, you can see how the market was trying to work up, and all of a sudden, look at this week, it's like it just let go. When I put on this chart the swing line study, and I teach this in my charting course, so let me bring that up. My charting course, I know we have a big following on these different videos. My charting course is really the meat of how you learn technical indicators. I only teach 5. And believe me, you'll master them in a certain way. Swing lines are one of them because swing lines define if you're trending. If you believe, as I do, that a trend is made up of a market making higher highs and higher lows for an uptrend or lower lows and lower highs for a downtrend, well, that helps you. And it also tells you, gee, what number do I have to get through to break that pattern? So it gives you an idea of risk associated with the trend. This is a market on the weekly chart that is not trending. You made a lower low, then you made a higher high. Not a trend. What we'll call is the noise in the market, the back and forth action like that. The market had been, up until this week, able to survive hits to the 18-day average, rallied, and then it was holding the 100-day. This week was where it capitulated. It just gave up, and the market got back under both numbers and underneath the 18-week moving average of closes. What chartists are going to look for is, can you get under 958 and just say this all becomes a top area, or does the market find its support in this general zone and try to pop back to the upside? When I take a look at Bollinger Bands, and these are the black dashed lines, let me explain what that is. A Bollinger Band is an algorithm designed to keep the market trading within it. It comes into play in several ways. First, typically it offers resistance to the top band, support for the bottom. But second, if you're going sideways in the band, you get an idea that like a spring inside of a pipe, prices are winding up. Eventually they break out and they will either take off to the upside or to the downside. They will come out of that sideways action. So it's a precursor before a trend takes over. something important to understand with it, and it's a great tool, one of my favorites. In the slow stochastic, this is momentum. So if you're as I am, and you may not be, I believe momentum indexes lead price. This is pointing down, prices down. As the market was coming up, and we can come right here, it's perfect. You had gotten to a point where you were in overbought territory. If the price can extend itself, maybe it gets to the upper Bollinger Band to find that first resistance. Here's the market coming up, and bingo, you get to it. As you got there, look at the red line. It drops back under and starts going under the blue. That's momentum turning down on you. It turned before the price did. When we come over to the meal market, let's get there, you got to the upper Bollinger Band. Again, I'm going to point this out. This sideways action is indicative of something going to happen. The longer it goes on, the bigger that something becomes. And right now, anybody that's been playing for a home run in meal, they haven't gotten it. You've gotten to first base, maybe second a bunch of times, because you'll get to the upper band, not too often to the lower band. Do you see that? So the market's also saying, gee, I've got a bit more bias to the upside than the downside. I don't seem to be able to get to that lower band. Momentum is turned down, not trending here. You also have the lower low, higher high, and each time you've hit this upper Bollinger Band, you have failed. That's important to know, too. When you come to oil, you're trending. You have a pattern of lower highs, lower lows. What has held the market recently has been the 100-day average of closes. I think you'd agree with that. The 18-day average, after you've hit the upper bands, you've pulled back to each time. And now if you rally, I would assume that to be the resistance. What do you think happens if the market starts down again next week? Well, you should be able to look at this and say, you know, maybe you go to that lower Bollinger Band. Momentum is still pointing down. The bias is down since you're under that 18-day average. And what? And the trend is down. In the corn market, a reversal week. Ta-da! Bring out the horns. You've got a pattern now of higher lows, higher highs. You have an outside week up. You took out the previous week's high and low. You closed today over the 18-day average. Resistance, admittedly, is going to be right up there at the top Bollinger Band, and you're not that far away from it. You're about 10 cents away, but that's room to go. And with that band is 359.25, let's call it, the 100-day average. This market, as bad as the daily chart was looking, is pointing the way to the upside. That's why I like to look at the weekly. It gives you an idea of everything. In the wheat market, a big reversal this week. You're up for the week, 26 cents. Let's understand what that is. The market made the lowest low of the move, came back, took out last week's high, and in the process, the momentum's turning up. So while the trend is neutral, when you took out the pattern, let's take off this week. There you are. You had a pattern of lower highs, lower lows, but you kept hitting this Bollinger Band. I think the pros were taking money off the table. Now, the market's reversing on its way up. I wouldn't be surprised if you get to the another 8 cents higher to the 18-week moving average of closes to figure out what's next. In the cocoa market, momentum is pointing down. The market's just sitting 2 days in a row on the lower Bollinger Band. Will it be able to take this action, push on that Bollinger Band, and start shoving it down? The odds are that's what it's trying to do right now. Let's assume it stops doing that. What price do you think it can get back to find resistance? The 18-day average of closes, 20.35, about 60 higher. So you come up with game plans. Doesn't mean you have to follow them, but part of what I teach in my charting course teaches you a way of thinking. Sugar market, higher high, lower low. Not a trend. Bias down because you're under the 18-week average of closes. Pushing down on the market is your momentum. Seeing problems in Brazil is problematic. So the weekly chart, not trending, but the bias is down, momentum is down. When we come to the coffee chart, higher high, lower low. No trend. You went down to the lower Bollinger Band. Momentum is still pointing down. My guess is the pros took some money off this week in this general area in the market, but there's no reason to get bullish on it. It might want to bounce from here, but that's about all that you could say. Cotton market. You went to the upper Bollinger Band last week, 2 weeks ago. The odds favor that if the pros take money, maybe it goes back to the 18-day average. Gee, it did last week. And if it rallies again, where do you think the next resistance point might be? I would say the upper Bollinger Band. So you come up with game plans. The trend is up, higher lows, higher highs, riding that band, and momentum is still up. So that's how I start looking at them. Now in the cattle market. The cattle market has been fighting at the 100-day average of closes. The trend of the market, as defined by the swing line, has got lower highs and lower lows. Countering that is the fact that the market is staying over the 18-week moving average. When the two fight each other, why be involved? Momentum has been pointing down. You got three things fighting each other. It's very difficult. If you come to the hog chart, it's been the opposite. You've got, on the weekly chart, higher lows, higher highs, and look what you rallied into. The resistance of the upper Bollinger Band and 100-day average of closes, and the market is getting rich in price. Momentum still up. Wouldn't be surprised if the pros are taking some money off the table there. So you put it together, and what you're trying to do is come up with a game plan, and in my charting course, I try to teach you how to execute that plan. 5 separate indicators, 6 hours of videos. So you don't have to worry. There's nothing being sent in the mail to you and all that. You come online, you're able to watch it. I'm going to start you with the swing line, and I am going to walk you through like a beginner, making sure in a PowerPoint you understand it, then walk you to charts and show you how to apply the indicator and draw it by hand. If you can draw it by hand, I know you understand it. The next thing are the different moving averages I use. I know you all see me use a couple of them here. I use more than those. I'll show you why and some of the tricks with them. Then slow stochastics. Slow stochastics are my favorite oscillator of momentum. Bollinger Bands is developed by, this is John Bollinger's game. Window envelopes, another tool you never see me in these videos talk about, but I use it all the time in my morning videos. And of course, we put it all together, and your charts are going to look a little like this. And I promise you, give me 10 days with you, 2 weeks. All that's going to say, well, I understand exactly what the chart action is. Understanding chart action doesn't mean you're going to make money. It makes you a technician. Nobody walks on water. I promise no matter the best laid trades, you're going to have losers. The difference is you're going to know how to control risk. The difference is you're going to recognize the trend. My goal is to open up your eyes, and then you add to it with everything that you want to. There is no right answer, but let's get you on the right path. Now, normally this charge, I charge for this, $109.95, and it comes with all my research. I don't know why that's acting like it is today, but it comes with everything that's there in the course. The charting software, the market research, getting into my morning videos, all of that. $79.95 for the Christmas holiday. You've got to type in the word XMAS. Do you hear that? XMAS. I wish this all worked behind me, but the phone number, that's where you're at. This is the website. You're going to go to the website. Under the word education is where the course is. Scroll down. It's got an FAQ page, everything else you'd want to know. Just type in XMAS in the discount area. It's all yours. I'm Ira Epstein. I thank you for watching. You have yourself a great weekend, and I'll see you all come Monday.